Today, Meta Platforms and Mark Zuckerberg brought some amazing news for at least three companies: Nvidia, AMD, and Arista Networks. Let me explain a little bit more in today's episode, so let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, if we take a closer look at X today, Mark Zuckerberg announced Meta's major AI compute investment. Obviously, when we think of AI compute, you can kind of see why I talked about those three companies. And I'm going to explain a little bit more throughout the episode. But first, let's try to understand what Mark Zuckerberg released. All right, so if we take a closer look at the post, Mark Zuckerberg mentioned, "For our super intelligence efforts, I'm focused on building the most elite and talent-dense team in the industry." And we've definitely seen that with the recent kind of acquisitions and poaching of AI talent. They are also going to invest hundreds of billions of dollars into compute to build super intelligence. We have the capital from our business to do this. Semi-Analysis just reported that Meta is on track to be the first lab to bring a 1 gigawatt plus supercluster online. They actually mentioned that they're actually building several multi-gigawatt clusters. We're calling the first one Prometheus, and it's coming online in 2026. We're also building Hyperion, which will be able to scale up to 5 gigawatts over several years. And we're building multiple more Titan clusters as well. Just one of these cover a significant part of the footprint of Manhattan. Meta Super Intelligence Labs will have industry-leading levels of compute and by far the greatest compute per research. I'm looking forward to working with the top research to advance the frontier. So obviously, right off the bat, we can see how this is very bullish for companies like Nvidia, like AMD, and Arista Networks. And I'm going to explain a little bit more how each of them are uniquely positioned for this overall investment. But we are seeing the following, that right now AI investments are going to continue pretty heavy. I mean, in the past, Jensen has mentioned, the CEO of Nvidia, that for every gigawatt of data centers, it equates to about $40 billion of AI accelerator revenue. So if you're talking about multi-gigawatts of data centers and some even bigger than 1 gigawatts, it means that you're expecting a lot of money to be spent on AI accelerators, which obviously I believe the top dog will be Nvidia, but there are obviously going to be some use cases for AMD. Now, the second thing that I believe this showcases is, if Meta is going to do this, what's going to stop OpenAI? What's going to stop Microsoft? What's going to stop Google and Amazon and all these players to do similar style of investments? So it kind of just shows where we're at in this overall market. Now, I do believe one of the things that's really kind of driving this is something I've talked about in this channel about a week ago, when we saw that kind of the big beautiful bill. So one of the things about the big beautiful bill is that 100% bonus depreciation through 2029. Data centers operators and chips fab can fully deduct servers, GPUs, lithography tools, etc. in year one. That accelerates return on investments on AI clusters and may pull forward hardware demand. This is good for suppliers like Nvidia, AMD, Micron, Broadcom, and for hyperscalers' CapEx budgets. The main thing is, right, if you are writing off a lot of if you're doing 100% write-off right off the bat on this, and I think you even do things like electricity and some of the other things running these data centers, it means you're going to pay a lot less of a tax bill, which in theory means you're going to have a lot more money for the next year to be able to invest more and more in capital expenditure. So I do believe this could be accelerating, and it's going to be something we're going to see maybe other data centers where they're going to write off a lot. It's going to help them off in forms of less tax payments, which will then help off have a better free cash flow and kind of a better cash flow statement available for the next year. So this is something to definitely keep a closer eye on. Now, I did mention that this is great for AMD. I think AMD is probably the smallest out of these, and we also saw other players, right? We have Micron that you can think of, because these types of investments are great for if you're going to build these type of AI compute. It doesn't matter if you buy Nvidia, AMD, make your own ASIC solution, you're going to need some form of advanced HBM. And Micron is definitely a core player there. So you also have a lot of companies that I didn't discuss or put in the title that you can see bullish. So regardless, the semiconductor industry and those in the AI space can see a massive tailwind because, like I mentioned, if Meta is doing it, why wouldn't all the other players do it? Now, Meta Platforms and AMD, they do have a little bit of a partnership here. We saw in AMD's most recent AI event that in addition to Llama Inference, Meta's AI recommendation, inference, and training models run on AMD's MI300X GPUs. So we do see that Meta is kind of a strong partner with AMD. So there could be some use cases where maybe where AMD could see some of the money coming into from this massive investments. Next, I want to talk about Arista Network. So this is ticker ANET, and Meta is actually a big portion of this company's total revenue. In 2022, it was roughly 26% of total revenue of Arista's came from Meta. In 2023, it was closer to like 21%. And fast forward to the end of 2024, it was closer to 15%. Now, the company has mentioned that for 2025, I believe here, I don't know where I have it, but for 2025, they still expect Meta platforms to be at least 10% of Arista's total network revenue. So this is pretty impressive, and it kind of just showcases that obviously, if Meta is going to be making a nice amount of AI investments, you can see some bullish scenario for Arista Networks. Now, I do want to say why I believe this is mainly bullish for Nvidia. So semi-analysis on their free side, this is all from their free blog, they talk a lot about kind of the largest AI training clusters by the end of 2026. What I think is crazy is Meta is going to outperform OpenAI Stargate, which is wild, and both OpenAI Stargate and Meta are expected to be GB200s and GB300s, with Meta Prometheus being around 500,000 GPUs there. So that is insane. I think it is wild. The third in line here is based on their reports is Anthropic with Project Rainer, which is going to be the Trainium 2, which roughly 800,000 chips. But it's pretty interesting, right? About that same type of power as OpenAI. And this is why, Jensen, I think this is actually showcasing a lot. I didn't even think about bringing this up in the original video while I was kind of preparing, but look at this. Anthropic and OpenAI are both going to build nearly an 800 megawatt system. One is going to be powered by GB200s. One is going to be powered by Trainium 2. Now, even though they're around similar power levels, you have a lot more chips, 2 times more chips here with Anthropic. So you have to worry a lot more with different things like cooling and all that. And even with double the amount of chips, you still have half the power. So it's kind of curious to see why would AWS want to go with this Anthropic? Is it just a way to kind of showcase that they can do things themselves? To me, it seems foolish, but I would love to see kind of the price point. But in forms of the ownership after you build the system, it's going to be pretty much on par, right, with about the same type of power solutions there. But regardless, back to the Meta topic, this is going to be a lot of chips of GB200s and GB300s. Now, another thing that semi-analysis provided was kind of, again, this is from their free side, they talk about how Meta is kind of transforming a little bit. Historically, Meta has been using a lot of its GPU clusters for core AI. So this is their advertisement revenue. This is for their traditional money maker. But coming here in 2025, 2026, and 2027, generative AI solutions is going to become a bigger and bigger portion of this company's total usage of GPU clusters. Now, how will the company be able to monetize that? That's a whole different story. And will it be successful? That's also a whole different story. But regardless, we can see a little bit of a shift happening here with Meta platforms. I wonder how Meta investors will eventually handle this, because it is going to be pretty expensive. Now, like I just kind of want to talk a little bit of some of the numbers here for Meta platforms. So they mentioned that they're going to invest hundreds of billions of dollars, and Meta is self-financing this due to its overall ad solution. Now, previous guidance on the low end for capex was roughly 60 billion. In the most recent quarter, they actually updated the low end to 64 and the high end from 72. So you are seeing that Meta Platforms wants to continue to increase capital expenditure. I'm gonna guess this upcoming quarter they're actually gonna increase it even more. And again, I believe we're actually gonna see this across the map with other hyperscale players. Now, if you want to see kind of an easier timeline, the end of 2025, they expect 1 plus gigawatts of computing power. By 2026, the first multi-gigawatts AI supercluster, Prometheus, is scheduled to come online, and then there's going to be future Titan clusters. In forms of recent investments, Meta Platforms recently made an investments of Scale AI for $14.3 billion, owning about 49% of the total business. In forms of this, there was a key hire, Alexander Wang, who now leads the new Meta Super Intelligence Labs, a clear signal of company's aggressive talent acquisition. Zuckerberg has also been poaching expert rivals with companies like OpenAI, Anthropic, Perplexity, and the list goes on, offering $100 million salaries for the next few years, which I think is pretty insane. Now, I do believe Scale AI was a great investment for them. I've talked about this in the past. Scale AI is focused on making sure the data is super clean. That's the top level. To make sure this data is super clean, super important to design top of the end models. And this can definitely help Meta Platforms become a massive player in the AI space again, right? They've been lagging with Llama 4, but maybe in the next year or so, we will see them becoming a massive AI company again. Now, one thing that I was kind of curious about, and if you made it this far, let me say, if there's one way you can help the channel for providing this type of information, is go to fiscal.ai/Jose. Sign up using my code, just use the link and you get 15% off right away. I use this platform on a daily basis. And here we're looking at, let me just kind of download the image really quick to make it a little bit easier to view. This is Meta Platforms free cash flow, which is the positive blue, capital expenditure, which is the negative blue, repurchase of common stock, and common dividends. So in the last trailing 12 months, we saw that $43 billion in capital expenditure, and it's expected to go closer to 68 billion by the end of this year. Now, I am going to guess, this is just my overall guess, we're going to see capital expenditure actually be much higher. We could potentially see this company has about $40 billion in buyback program in the last trailing 12 months. We see a slowdown in buybacks and being used to accelerate more of the capital expenditure. They also pay about $5 billion in dividend. So in theory, the company can still throw in a lot of money to kind of see kind of these increasements in capex, which I think is pretty impressive. So I can definitely see capital expenditure becoming a big number for Meta Platforms. Is it worth it? That's something that's going to take at least 3 years for us to really see it play out. But I'm very excited. It actually gets me pretty excited. If we do see kind of like a negative sentiment towards this, I'm personally going to buy stocks of Meta. At the moment, no, the market is actually pretty excited about this. The stock is sitting at $720. So the market isn't too phased by it. But maybe once we start to see the real number of potentials, the stock price could drop. And that would be a reason for me to add more and more to my position. So I hope you guys enjoyed today's episode. Take care. Have a good day and see you all next time.